Okay, this is the daily money-making setups on the S&P Emini using the 1500 tick bar chart and ProcessTrading.com's right edge trading system. So we're going to look to where you could have found good trades, well set up, and a fairly easy trading day. Right at the beginning of the day, which is this vertical line over here, you can see price was going up. We knew that that was going to happen because you see on this indicator right here, which is the energy indicator, which stands for internal energy, with demand being green, weakness being gray, and supply being red, we saw demand coming in. What's more, with this indicator, you will notice that the configuration of it goes from peaks and valleys and peaks and valleys and lower peaks and valleys and peaks and valleys. That's the nature of it. That's the nature of trading. Nothing goes in a straight line. Nothing ascends constantly. And this tells you when that's happening. That's why this indicator is such a more efficient proxy for volume. Volume is very difficult to read. This gives you essentially the same information. It's not a one-to-one correspondence to volume, but it's essentially the same information presented in a more intelligible format that gives you a high degree of accuracy. Then below that, we saw the sentiment oscillator, which tells you about the movement of price. You see the momentum line here, this tricolored line. This cuts up, down through the upper bounds. This is an oscillator with an upper bound and a lower bound. And it's cutting through this dashed line here. This dashed line here is the sentiment line, or its conviction, really. So that's the difference between these two lines. The momentum line moves fairly fast, whereas the conviction doesn't change easily. But where they cross, that is significant. And they crossed right over here at the beginning of the day with momentum coming up and sentiment sloping up. So it's not only the position of the cross, but it's the position within the oscillator where the lines occur, and also their slope. That's important. As well, the slope is important down here on the short-term trend oscillator. So we saw that the short-term trend oscillator, which is unique in itself because it's an oscillator, but the boundaries to the oscillator change in accordance with the momentum and the movement and the demand. So that when you see the short-term trend, which turned green here, start to slope up, that's another positive sign that you are in a trending situation. Just like down here, this is a positive sign that you're in a downtrending type of situation. So right here, you could have jumped on this, but you didn't have any of the process trading trend trade signals to take that. And as you know, if you've gone over to ProcessTrading.com, the upper segment of your screen here is the trend trading portion of it. And that trend trading portion is a combination of the process trading VWAP, the timing alert dots, the price bars, and the contrarian bands or contrabands, where they point out the places that are appropriate to take contrarian trades. Then below the lower segment that has the three indicators to it, the energy indicator, the sentiment oscillator, and the short-term trend oscillator, these are for contrarian trades or discretionary trades. So the first place we could have taken a trend trade today, well, the process trading, the VWAP was yellow here, and it has these green segments in it that add emphasis to the movement of price. And it has these timing alert dots. If the VWAP is yellow, then you can, according to the system, you can take a trade to the long side anywhere there is a timing alert dot below the price bar. So you could have taken it here, here, and here. Now, the way that the trade management works that's associated with this is that when you have the VWAP yellow and you have a timing alert dot, then you can take a trade, but you must take it 2 points. You must set your order entry 2 points above the high of the bar associated with the timing alert dot. So in this case, the 2 points would have been up here, and you would have not got filled. The same thing is true of this one. It would have been up here, and you would have not got filled. But this dot here, as we placed our entry, we see that the high is 33.50, and we're going to place our order entry at 35.50, and that is right in this area right here. So you would have got filled right here at 35.50. Now, getting filled there, you take that trade, and it goes up to 39.25, almost 4 points. The essence of the trend trading, and of all trend trades, whether it's to the upside or the downside, is that you're going to buy into strength and sell into weakness. That is what the system does for you, so you are not guessing as to, is this an appropriate place to take the trade? Is this appropriate time to take the trade? Is this a high probability occurrence to take the trade? It does that for you. Now, you can see, if you looked at the discretionary indicators below, you could see that on the sentiment oscillator, momentum has started to cross up through the sentiment line. Again, another strong indication that price is likely to move up. As well, on the short-term trend oscillator, the short-term trend line came down to the pullback line, slightly below it here, and then went back up. The short-term trend line will often hit the pullback line and then reverse into the opposite direction and continue into the trend. So this was your first trade of the day. This is the first trade setup of the day, which was, again, essentially 4 points. We knew to get out of that trade because we saw that demand had formed an apex and now it's in a decline. And right in here, weakness is starting to come in. Right here, momentum drops off dramatically, and the sentiment or the conviction starts to slope down, a sure sign that there's going to be selling occurring. And the same thing here is confirmed with the short-term trend oscillator, where it was above the top of the oscillator boundary, and it cut down through it, and it started to angle down, and here it is going even through the lower boundary and angling down. So we knew to get out in this area. Furthermore, we knew more than to get out in this area. We knew that we could take a contrarian trade at this point. So we got our trend trade going up, and now we're going to take a contrarian trade. The contrarian trade works much differently in trade management than the trend trade. The trend trade had you buy into strength by placing your point 2 points above. And so it keeps you out of all the whipsaws and everything and gets you in with the trend, however far the trend goes. In this case, it went to this point here. Now we're going to take a contrarian trade here because price had hit the contraband line right here. Now, ideally, we'd want to see it above the contraband line, and we'd also wanting a timing alert dot. But we had a timing alert dot here. In this push up here of demand, it didn't quite cross the contraband line, but the timing alert dot came in. So we are interpreting this timing alert dot and this push up to the contraband trade, or a contrarian trade, and we're looking down. We're not going to get into it right at this moment, because right at that moment, on the discretionary indicators, which are also used for your contrarian trades, it is right here, and it's still, demand is there. But as soon as demand turns weak, right at this point here, we can get into it. Now, the way that you get into the contrarian trades is when it hits this line, you want to immediately get into it, or when you think that as soon as you see that it's appropriate to get into it, like at the first bar here of weakness, you could get in right this doji. You enter immediately. You do not place your order 2 points away. You get into it immediately, and you set your stop for a half, 1, or 2 points, so that you have a tight stop, so you have a low risk and a large reward probability. So we get into it right here immediately. We don't have much of a pullback at all, maybe half a point, quarter point, half a point. So we get into it right here, and that gets us into it. Well, if we got into it right at the doji, let's say we got into it at the low of the doji, that would be at 38. And then we did not get out until the momentum had crossed back up. That would be right here. And that low is 25. So 38 to 25, that's 13 points you're taking. Maybe you would have got out here, but if you waited till the sentiment oscillator and the momentum line had crossed through the sentiment line, which is a sure sign that price is changing, then that would have been 13 points. Now, at this point here, again, we have a timing alert dot. We have a gray VWAP line, which means we can only take timing alert dots that are above the price bars unless we're going to take a contrarian or a discretionary trade. Well, we cannot take a contrarian trade here because price is nowhere near the contraband line. But we can take a contrarian trade. If we did that, we would be taking that contrarian trade based off of the interg and the alert dot right here, and this is a trend alert dot. At this point, we don't know if that trend is going to be going up or down. When this is the right edge, we're looking at it. Sentiment is sloping down, momentum is sloping down, and price is sloping down. So if we had to guess, we would say that that trend is going to continue down. Except here we see weakness coming in to the supply side. And we see it forming its apex and then it going towards the valley. We also see at this point over here that the momentum line is crossing the sentiment line. So based on, we had a timing alert dot, we had a trend alert dot, we had the momentum changing from down to up, and it was crossing through the sentiment line. We're looking to go long. Now, we may not want to go long until we see some positive energy coming in. And we see that over here. At this point, we see that the sentiment line has changed a little, but if we even waited a bar or so, we see now that the sentiment line is changing, is starting to move upward. So way back here is when we got our signals, and over here in this area is when we would get in if we were using a discretionary trade. And if we got in at the high of that, which would be 28.75, and went up to the high of the short term, the trend there that is taking place, that little rise in price, it went up to 35.50. So that's another 7-point gain right there. Now, truly, all you have to catch is one of these. This 4-point, this 13-point, this 7-point. All you have to do is catch one of those, and your trading is good for the day. If you wanted to classically get out of this, you'd wait till this weakness coming in right here, and you would get out. So those are your setups for today, and that's how to use the process trading right edge system. Now I'm going to show you one more thing here. I'm going to show you the difference between, let me see if I can do this. Let me put in I'm looking for the Keltner channels. And there they are. You can see how the Keltner channels work. They're so much different than these contrarian bands. And they do not give you clear indications of where the trade would take place or how it works. It's not a system at all. It's just an isolated indicator, and very, very difficult to use. Let me remove that. And then we'll put in another one so you can look at it, which is, let me see where these are. We'll put in the Bollinger Bands. The Bollinger Bands are much different than the Keltner channels. But again, you know, they ride price here, they ride price here. Clearly, they did touch here, which is the same place as our contrarian bands. And up here, they did come in our timing alert dot, as they did down here. But the wildness of this and them cutting through price all the time is, again, very inefficient, very difficult to apply it to a system. It's an isolated indicator, and that's why these are so difficult to read, as opposed to the simple and effective contrarian trades, so that you can either take a trend trade, a contrarian trade, or a discretionary trade. Very easy to see, very easy to apply, and very easy to trade effectively. So, and I hope all your trades are effective. If you want to see more of these daily setups, just hit the subscribe button. Or if you want to see how the system works as a whole, head on over to processtrading.com, and there's lots of videos to explain the whole system there. And hope we'll see you on the site. So, see you on the next video.